I have other obligations. We were supposed to start about 8 minutes ago, but being as I'm doing this from home, it is there are some additional complications. I want to remind you that derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This is episode number 2152 of the Trader Bite. We're going to take a look at where the market stands. Market firmly risk off. All equities are down. Equities started slipping last night at about 10:15, 10:30 p.m. Eastern U.S. time. The major catalyst here is inflation or yields. The 10-year notes and the bonds took a pretty decent dip last night and pushed the equity markets lower, with the Nasdaq taking the biggest hit. The Nasdaq having traded pretty much around 15,590 until the 10-year notes and 30-year bond started to move pretty aggressively to the downside, which means yields are rising. The 10-year note breached 1.85% in yield. As a response to that, the Nasdaq immediately dropped down to 15,406 from 15,590, and then consolidated to continue its drop. We're seeing activity across the board. We're seeing gold sweeping down and now rallying back up. We're seeing the treasuries recovering slightly. They're coming back to where they finished on Monday. Treasuries have been slipping lower for some time. So as we look at the 10-year note in front of you and the 30-year bond, you'll see that they're off 33 basis points and they're off 42 basis points. They've been at this level pretty much the entire evening. The Bund is holding steady, but we're feeling it across the board. The volume is quite high in the S&P, 304,000 contracts, with the overnight inventory at 83% short. The range is very wide for the overnight session. I want to remind you that tonight's overnight session officially includes Sunday's overnight session. So it actually, if you look at the range, it's not 46.6175 down to 45.90 and a quarter. That's incorrect. You have to include Friday's range because this is considered one session from Friday night through Tuesday at the close today at 5 p.m. Eastern. So it's 46.7175 down to 45.90. So the actual range so far is 81.5 points, which is well beyond the first standard deviation of range shown below at 33.75. This morning, we had some key earnings. Goldman Sachs came out and they actually missed, which is surprising. They don't usually miss. Goldman Sachs came in at $10.81 versus $11.73 expected. They also missed on the revenue figure. They're expected to come in at 12.639 on Q4, and they came in at 12.01 billion. We also got PNC, which beat by 14%. The banks have actually been beating, and that's likely to slow down a little bit. So PNC beat by 14%. Bank of New York beat by 3%. Truist Financial, which is also a major player, beat by 10%. Charles Schwab missed by 1.15%, which is not common. They missed both on the earnings, which came in at 86 versus 87 cents, and revenue, which came in at 4.708 billion versus 4.770 billion. We're still looking for JB Hunt Transportation and Concentrix after the close. Again, earnings are on deck, and Goldman Sachs has missed. U.S. Treasury yields rising, focuses on earnings. Japan seeing inflation for the first time in a decade. As far as the calendar, 10 o'clock Eastern, we get the NAHB Housing Market Index. For January and 4 p.m., we get the net long-term tick flows. We also have the ECOFIN meeting from the Eurozone. We're also supposed to get the I don't see it here anymore. Saudi Arabia, that's why. We're also supposed to get the, let me just turn this on. The OPEC monthly report out of Saudi Arabia. This morning we did get the claimant count and unemployment rate out of the UK. Both were better. The ZOO, which is a key figure for Germany, ZOO economic sentiment came in, and it was very strong against expectations. 51.7 versus 32 consensus. We also had New York Empire State Manufacturing, which came in at negative 0.7 versus the expected 25. It missed by quite a bit. NAHB expected at 84 billion. And that's what's on deck. So that's where we stand this morning. There should be a lot of action here coming into the session. I want to remind you that this is a one tick point and figure chart, 1 tick by 8. I do remove the data from yesterday's session because yesterday's session is not a valid RTH session. So we're looking at Friday here. Friday actually did what was anticipated, even though we didn't have a trader bite. What was surprising about Friday is that we went neutral. We took out the high after taking out the low of the IB, while while closing near the high but not pushing through. So this was an interesting close for Friday. The expected target was 83 and a quarter. It's not looking like it'll get it today. Give me a sound check. How's my sound? Let me know where we stand in terms of sound, if you can all hear me, if I'm talking to myself here. This is my home workstation, so who knows? Although I've tested everything. All right, very good. Okay, thank you guys. Very flat, very flat action in terms of Friday. Very flat on the delta in terms of Friday, and a profile that is again an active price discovery profile. You can see the market really trying very hard on both ends to find value. Here's Friday right here. The overnight session took a big dip and then took a big rally back to the upper distribution on Friday. We opened up and we pulled back all the way down to the overnight low before rallying into the close. This morning we were drifting sideways, pretty good range until we came in. So we're drifting sideways until we came in, and this is where the treasuries started to steamroll down in the futures and up in yield. And then we have a small pullback here before the continuation. So we have an impulse continuation, which is also an impulse, which had its own continuation here. The point of control at the low end of the range, we're just above the point of control, just below the full session VWAP and full session mid. We're opening at the low end of Friday's range. We're opening in that area. And if you look up here, you'll notice that we've kind of left this area behind us up here in the 4680, 4690 area. That was kind of a back and forth test, and we pushed through, tested from below, and then sold off on Thursday. And then Friday couldn't make it back. This is really a weak market. We are now looking at targeting this 45.72.75 down below. So we'll see if we get a continuation today, or if it finds its buyers, finds its base, and starts to rotate up. In my opinion, this thing doesn't have the buyers to keep it afloat. Okay, so that's where we stand right now. Being as it is the first day of the week, generally I like to go through and look at all the pieces that matter for the week. But I'm going to need to keep this short. Key being, I need to take my daughter to her school. We don't have help with the newborn this week, so I'm having to do all of my Trader Bites early this week, 15 minutes early, and cut out early. But today, as I said, claimant count and unemployment out of Great Britain, key figure, the zoo sentiment, also out of Germany, a major figure. Tomorrow, we get inflation rate out of the UK, we get housing starts and building permits out of the US, we get balance of trade out of Japan, we get the loan prime rate out of China. On Thursday, we get existing home sales out of the US, inflation rate out of Japan, and a GFK consumer confidence out of Great Britain. And on Friday, we get retail sales out of Great Britain, and that finishes up the week. Okay, so that's what's on deck for the week. Looking at the bigger picture and what was accomplished last week, the key pieces to take away here, we are still in the October 25th balance, which has 83. This is your point of control here. What is going on? Okay, looks like we froze. Sound check. Sound check. Looks like we froze. Yeah, my screen has frozen here. My broadcasting software, which has been acting up, has now frozen. So I can't really mark the screen and I can't control the broadcast anymore. So that's awesome. Let's see what's going on with this thing. Yeah, it looks like this new version is completely unstable. Unfortunately, I'm going to have to cut out, but just using the image on the screen here, I'm going to try to do my best to point out what's going on. Do you see my cursor moving around? Do you see my cursor moving around here? This is okay, very good. I can't draw on my screen, so there's not going to be any scenarios that I can draw out. But here's what we need to take away. What we need to take away is 2 weeks ago, we put in a new all-time high of 48.08 quarter, and we immediately sold off in what was an impulsive move. That impulsive move got a continuation last Monday, pushing down to 45.72, and that gives us about a 250 point drop from the all-time high, and that's a very, very quick drop. And then we made an attempt to push back above the key resistance. At that point was around 47.35. It went to 39.5 and has pulled back pretty deeply, and now we are basically challenging Friday's low. So to me, this really is setting up to create a continuation trade lower, and unless yields come off, which I don't see a reason for yields to come off at this in these current conditions. There's nothing there that the Fed is talking about or doing, or anybody's doing, to affect yields. So, barring that, momentum will continue. It's kind of like a Newtonian, the laws of motion, Newton's laws of motion. It's likely to continue lower. So, to me, today, what I want to leave you with, it is very likely, unless it gets back above the 46.50, which has been a major inflection point in this range, unless it gets above 46.50, the expectation is it's likely to tackle 45.72, and we're likely to see 45.50 next, 45.50 next, and continuing the weekly one-time framing up. So in these boxes, you can see that each box represents a week, and you can see the weekly boxes are making lower highs. So we're one-time framing on the daily, weekly, the monthly so far, still holding steady. The monthly low is 44.85 and a quarter. We are completely imbalanced. If it does not get above 46.50, then we're likely to see 45.72, and then 45.50 is next. That's where we stand this morning. Unfortunately, I'm going to have to cut this broadcast short and let you guys go. Thanks for tuning in, and sorry about the technical issues.